Thanks for joining me here at NTD Business. I'm Don Ma. Just a few things to go through today. First, Blackrock boss Larry Fink says he's going to stop using the term ESG. The term and idea of ESG has become more controversial recently, as seen with boycotts. ESG stands for environmental, social, and governance. It's sort of a catch-all term that encompasses a range of supposedly ethical, responsible business practices. Recently, it has become politically polarizing in parts of the Western world, especially in the United States. Blackrock has itself been the target of investigations by some Republican-controlled states, and even an investment boycott in Texas. Fink says, quote, "I'm not going to use the word ESG because it's been misused by the far left and the far right." But he said dropping references to ESG would not change BlackRock's stance. The firm would continue to talk to companies it has stakes in about decarbonization, for example, and corporate governance. Fink also said in January that BlackRock had lost about $4 billion in managed assets as a result of the backlash against ESG, though it's a fraction of its $9 trillion that is currently under management. In Larry Fink's 2023 annual letter to investors, he did not mention the term ESG a single time. Now, compared to 2020, he mentioned it 26 times. And now some good news for the economy, potentially. U.S. consumer confidence increased in June to the highest level in nearly 1.5 years, according to a survey on Tuesday. The conference board said its consumer confidence index rose to 109.7 this month. This is the highest reading since January 2022, from 102.5 in May. The chief economist at the conference board says, quote, "Greater confidence was most evident among consumers under age 35 and consumers earning incomes over $35,000. Though some consumers are still anticipating a recession at some point over the next 6 to 12 months. The conference board survey showed consumers' 12-month inflation expectations ticked down just a hair compared to last month. And just a quick overview of markets. U.S. stock indexes rebounded on Tuesday from a recent bout of losses because upbeat economic data calmed investor worries about a recession. Reports showed new orders for key U.S. manufactured capital goods unexpectedly rose in May, and sales of new single-family homes surged in the same month. And of course, consumer confidence, as I mentioned earlier, increased to a near 1.5-year high in June. A senior portfolio manager at Dakota Wealth says that the data we have is a confirmation to investors as they climb this wall of worry that the economy has weakened but not collapsing. Despite recent market weakness, a rally in growth stocks, an upbeat earnings season, and hopes of the Fed ending its monetary tightening soon have set the main indexes on a course for quarterly gains. Meanwhile, the tech-heavy Nasdaq is on its track to notch its first half-performance beat in 40 years with a near 29% gain. And President Biden yesterday announced that $42 billion is going out across the country to deliver high-speed internet. So could this promote economic growth and keep recession fears at bay? With me now is Mark Hamrick, Senior Economic Analyst at Bankrate.com. So Biden announced a plan to spend about $40 billion on nationwide high-speed internet. He says it could help families, 19 million of them, save around $30 a month on their internet bills. So, you know, we've been talking about having a recession, but it hasn't appeared. Some are saying it's the amount of liquidity that's holding up the economy. Now, with this new bill, this new spending, around $30, wouldn't that make it even harder for the economy to experience a recession and counter to what the Fed wants?
Good to be with you, Don, and thanks for having me. I think we can look at these two issues essentially in separate contexts. And what I mean by that is we're really talking about the deployment of $40 billion over a long period of time here. And economic cycles these days, let's say over the last 10 or 20 years, particularly the last 5 years, have been much more compressed in the sense of time. And so, yes, this will give a lift to the economy in the long term. Let's think about this move from a historical perspective. Of course, this is the result of the $1 trillion infrastructure law that was passed about 2 years ago now. And the first thing that comes to mind for me is something that happened way back when under President Franklin Delano Roosevelt, when there was a push to electrify the United States at a time when there were many, many communities and rural areas of the country that did not have access to electricity. And that was necessary for their, let's say, would-be success in the economy of the day back then. Well, what is the analogy here? It's necessary to have access to high-speed internet for individuals, families, and communities to participate in an economy that is increasingly digital. And so I think what the president and the supporters of this effort are looking to do is essentially accelerate deployment of high-speed internet in a way that would have taken much more time if it had been done, if at all, by the private sector. And it's true that there are a variety of solutions that are coming into play here for access to the internet, whether it's 5G on a cell phone, whether it's via satellite, whether it's actually 5G via cell phone to provide internet within the house. But you have to have towers, you have to have perhaps fiber optic cable, and all those are expenses that private industry is not necessarily willing to deploy in some of these far-flung locations. We're talking about the expanses of states like California and Texas, or more rural states that don't have so many larger communities like West Virginia or Montana. And so I do think that in the intermediate or longer term, this will help people. They need to be participants in the digital economy. They need to have access to the resources that broadband will provide. And in terms of the economic cycle, I think there are much larger forces at play that have been contributing to things like high and sustained inflation, supply chain difficulties, consumer demand, which has been really remarkable, first for goods and now for services, and we're seeing that play out.
Yeah, I mean, saving $30 more or less for families every month, I mean, that's a good thing, right? But with economics, there's always pros and cons. Would this be inflationary?
Yeah, I don't think so. I think that maybe broadly looked at, the totality of all the fiscal stimulus measures that were put into place during and let's say after the pandemic, and some of that spending is still obviously going on with highway building around the country. You can see it in many locations. That is certainly supportive of economic activity. But I don't think the broadband measure in and of itself is inflationary. Obviously, every additional dollar you spend in the economy courtesy of the federal government is, in a sense, fiscal stimulus. But I don't think, for example, the Federal Reserve under Chairman Jerome Powell looks at the deployment of these internet funds, which is just a small portion of the overall infrastructure funding, and says, you know what, we need to raise interest rates more. They'll be looking at many other factors that either weigh against or in favor of rate hikes.
So in terms of spending, right, the government is, some say, is spending too much. Would this fit in that narrative?
Well, in my job, Don, I have to try to be politically neutral, but at the same time, be a fair economic analyst. And the reality is these political decisions with respect to spending federal dollars, also in the context of a rising federal debt and deficits, those decisions have already been made. And, the Federal Reserve, our central bank in the U.S., looks at those decisions and says, okay, we have to adjust monetary policy accordingly. And as we speak, with the decision and announcements and news conference that was held by Chairman Powell very recently in Washington, the expectation now is that the Fed will need to raise interest rates 2 more times, in part because of a strong job market. The job market has remained remarkably resilient and robust as we speak. The unemployment rate remains below 4%. It is just a few tenths of 1% above the historic low of 3.4. And so does additional expenditures on internet infrastructure cause a tighter job market? Not really. I mean, that's not going to be something that is going to be increasing, let's say, incredibly supportive of employment. But for those communities which have been marginalized in a sense over many years because they didn't have access to this technology, this will help presumably to lift them a bit. And we have a huge problem in our country with the economic divide, wealth inequality, income inequality, and many of those rural communities are on the lower end of that battle. And so essentially, this is the Biden administration's way, along with the Democratic supporters of the administration and this legislation, to try to help those who have not been participants in the economic expansion of many years.
Now, of course, I'm not saying the government shouldn't allocate some money to spend on infrastructure, internet, etc. But what do you think about the national debt being over 120% to GDP?
It's a horrible problem, Don, and unfortunately, it doesn't really seem to rise to a sufficiently important level of debate in the nation's capital or far beyond it, to the extent that we have serious civil constructive conversations about it. And I'll give you an example of where attention needs to be trained, and that is, for example, the unfunded commitments for things like Social Security, Medicare, and Medicaid, which are really looming challenges for the country and for the people who expect to get those benefits. And elected officials in both parties, both Republicans and Democrats, have essentially said, well, they're not going to touch those entitlements. But as we speak, there are drop-dead dates where those entitlements are not fully funded, and they're not very far down the road. So that's a good example of where inattention to the debt and deficits have really allowed looming problems only to essentially mushroom. And like health, like not paying attention to one's personal finances, the longer that one waits to address these problems, to come up with solutions or resolutions of the problems, the worse the problems get. And so it'll be interesting, because here we are speaking essentially entering the second half of 2023. The presidential election cycle in the U.S. is going to be heating up, let's say, over the next 6 months. It'll be very interesting to see whether these fiscal and related issues see the would-be light of day in the sense of the national conversation, and whether they could be so important that they could dictate how elections turn out. That has not necessarily been the case, because people tend to be very focused on the short-term aspects of the economic cycle, essentially, how are my job prospects, how is inflation, and not necessarily thinking about what the economy might be like 3, 5, even 10 years down the road.
I mean, we all talk about reducing deficit spending, but where can we cut spending, right? If you ask a family, you can save $30 a month on your internet bills. Who's going to say no to that?
Well, sure, and ultimately that is not going to be part of the solution. But you think about a ledger, a balance sheet, whether it's for a household or the federal government. There's income and there's expenses, and there are areas where the government could be looking to boost income, and there are areas where it could look to reduce expenditures, and particularly for those entitlements, and some might say also for defense spending. But the geopolitical tensions of the world give elected officials an argument in favor of keeping defense spending stable, if not rising. And very often that is something that elected officials just simply don't want to touch, because if it would be in a situation, let's say, sacrificing the security of the United States, well, you don't want to be on the side of the team that contributed to that. So these are very difficult issues, and the good news is in the United States we do have democracy and we do have elections, and to the extent the American people are engaged on those questions, they can decide how those things ought to be resolved. We could have another conversation, Don, that would be much longer one day about, let's say, the effectiveness of the political system in the United States with respect to addressing solutions. But there still is an input for voters to try to decide these difficult questions.
Yeah, I think the decisions that benefit the U.S. as a country, some of them won't get you reelected if you follow through on them.
I think you're right, and we live in a society these days where attention spans are limited, where there is increasing noise between information, disinformation, and misinformation. And I think for members of the public, it's increasingly difficult to dissect what's true and what is untrue. And that's why we have a burgeoning movement that's, maybe 10 or 15 years old about media literacy, news literacy, and we also need to have things like civic literacy so that we understand how government works.
All right, thank you very much today, Mark. Pleasure speaking to you.
Thank you, Don.